following content is a technical analysis on Smith & Wesson Brands Incorporated, a company of the industrial sector, aerospace and defense, here off the daily interval. A fundamental catalyst in the gun right advocates receiving a significant victory with the U.S. District Judge Stephen McLinn granting a preliminary injunction against Illinois' ban on assault weapons and large capacity magazines. The decision is in contrast to rulings made by two other district courts, which may lead to potential appeals that could go all the way to the Supreme Court. And it is really worth noting that the Supreme Court has already ruled on similar cases multiple times and has made it abundantly clear that any attempt to ban guns or magazines or any capacity is entirely unconstitutional. And really where I'm going with this is history has shown that the sales of these firearms tend to decrease once the initial fear surrounding a ban subsides, but they also they tend to increase again when there is a potential ban looming in the near future. And talk about hard fundamental data coinciding with the technical analysis, where we have a rising bearish falling wedge pattern here with a nice clean big divergent high, primary uptrend line here off this wedge pattern of the December 2022 reactionary lows here, where we have the 50 exponential 50-day 200-day moving average honing in up above with a potential golden cross bullish continuation pattern here. When the two 50 and 200-day moving average come to intertwine with one another, what usually happens is you'll either have the continuation of this bullish rally, whereas it usually can also mark the end of the rally. And once it hits, and it also works in an inverse way through the death cross continuation inflection point between the 50 and 200s, and that's what happens. So we're at this key inflection point now. We're at this key inflection point coinciding with the primary uptrend line off this wedge pattern, where we have this 1176 gap support, multiple gaps within between off reactionary highs, reactionary lows here. Big support here, just a multitude of support with your moving averages. 1176 gap support, primary uptrend line here, just the key inflection point. And I believe a solid daily candle close below ought to issue a sell signal, in my opinion, where we start to cut through any of these by means where a potential backtest would offer a clean objective entry short trade down to the downside to that least that 1116, undercutting the 50 and 200-day moving average there for a 6.3% drop, down to 1079 price support for a 9.5% crash, down to 1038 for a 13% crash, 1003 price support, which would be a 16% crash. Really worth noting is the 1038 and 1079 price support coinciding with the 618 fibs retracement, 50% fibs retracement, and I believe that the 382 fibs retracement goes there. That's when things will start to get expect any sort of a quick fall to the downside on a move down to the 236 fibs retracement. Once we take out that 236 fibs retracement, I believe margin calls, forced liquidations, big heavy selling will occur once we snap that key. If and when we get there to the 236 fibs retracement, if it goes, I would only expect some pretty rapid selling to the downside. We have both confirmed crossovers on the MACD and oscillator, honing in on their zero line thresholds there, with an oscillator histogram already displaying and showcasing solid red candle closes down below there. So it's already waning down, and we'll start to take away the lines clean. Love the bearish rising wedge pattern here. As far as any candlestick patterns, take away any of these lines. Nice, clean, bearish engulfing candle close here, where it supersedes all previous candles down below. Just that is a bearish candlestick front there. Bearish engulfing candle close. Begin the process of a new cycle where we begin to break down if we snap these key levels there. So all eyes on the 1176 price support, gap support, coinciding with the 50 exponential moving average, 200s, and I believe we take out that 1176 price support there. I believe we'll begin to just slice right through some of these key moving day averages. See what happens as far as that front. We'll be very patient, and wait for that solid candle. Click below. And we do have the 1 fibs retracement called 1246 price resistance up above. Pretty darn good resistance up above there, which has been reacted multiple times. You could even begin to scale in on that price resistance up above, which would provide a great, excellent risk reward ratio. And what I really want to do is I want to take you out to the much larger picture. And this is really going back to the inception of Smith & Wesson, initial public offering right at the beginning of 2002 there. So take away, put some lines out here above, and as you can clearly see, we have this primary uptrend line here off the 2002 reactionary lows, cuts right through the 2008 financial crisis lows, the 2011 crash here, which again have a lot more other factors. But as you can tell here, as far as following the political arena, you usually get some sort of big key inflection points in that time, whereas you had Barack Obama running the country here off a 286 surge to the upside, again trailing it all the way up to 2016. So these are big gains. You're talking about 724% in gains off the 2011 lows. As far as modifying the Second Amendment legislature there, and then of course you have your Republican president come in 2016. Donald Trump, and just took a massive crash to the downside for an 82% crash. Oh, again, these stocks tend to move. Many sectors across the board tend to move alongside the political arena once some of the new legislature is enacted there. Oh, we'll see what happens. As far as the 236 Fibs retracement, also cuts right through this this reactionary low. Again, multiple reactionary lows and highs. That's where I suspect 822 to go, and that's where the real action will start on a crash to the downside, in my opinion, especially where you have the 236 Fibs cutting right through the 2020 gap here. So I believe this was the George Floyd protest here. All eyes on the 236 Fibs, and the 382 Fibs retracement cuts right through that gap. Strong support there. And again, I would only suspect some pretty heavy selling if some of these key levels are breached. We'll see what happens. I'll keep you updated if I see any more significance on the charts. Wait for some of these breaks. If not, an add-on to your resistance as a short trade setup. If not, a break below the 1176 price support.